All right, so in this video, I'm gonna cover three things. Right, first we're gonna talk about constant liquidity targets, of course, the Forex algorithm, and the art of timing. So at the start of this ninth hour, the first thing we recognize is we got the previous H4 high here and the previous H4 low here. Now within this previous H4 segment, what is the algorithm currently delivering, right? And in this case, it was delivering an oversold scenario because we had the inefficient price range here and the constant liquidity target. The price just swept inefficiently was the current H4 low, right? Therefore, you can anticipate this next H2 candle to essentially close bullish, right? So back up a little bit. The liquidity targets are the previous H4 high and the previous H4 low, right? Now, once those are acknowledged, what is the algorithm currently delivering within this H4 segment, right? And as we can see, the algo is delivering an oversold scenario, right? We trade price trades down very inefficiently, and we go and sweep the current H4 low, right? Therefore, now when it comes to Forex timing, we would anticipate this H4, this next H2 candle to essentially close bullish, right? Therefore, now and we fast forward from here, right? So the candle opens up, and what do? Right? Price moves impulsively to the upside, creates the H2 low very inefficiently, and we go and sweep the previous H4 high very inefficient, right? Now, if we just acknowledge the anatomy of price during this sweep is very inefficient, right? And now per rules, if we throw rules into this equation, right? The most recent constant liquidity target, which will be here, that runs major buy side liquidity, is now an ultimate target, right? Now, therefore, which now makes this the last hour of this first 2 hour segment. So this becomes the last hour of this first 2 hour segment. So with this being the last hour, in this case, then this is perfect timing for the H2 low to be printed. Now, with this perfect timing, now within this 2 hour segment, right, let's acknowledge the constant liquidity targets, right? So within this 2 hour segment right here, the first constant liquidity target is that if I'm anticipating this to be the H2 low, then this is my constant liquidity target that if I do take a buy in this case here, that this would be where the COT, right, to go target, right? Now, from a time perspective, right, if we look at this hourly segment, right, so from 10 to 11, if we look at this hourly segment, and even if you broke this hourly segment down into two 30-minute intervals, then if you're essentially anticipating this last hour to close bullish, then you would need the low printed first. And in this case, in the first 30 minutes of this hour segment, this is then perfect timing for the low to be printed first. And also acknowledging the algorithm, right? So within this 2 hour segment, what is the algorithm delivering? The same exact fractal play as we delivered here, right? Very inefficiently, price trades down and we sweep the current H2 low. So now the algorithm, once again, is delivering an oversold scenario. right? And then from there, we got the optimism, right? Really nice optimism, very deep retracement here, right? And optimism can be breaker structure, maintenance, anything of that nature, right? So in this case, you got maintenance, even more optimism, right? And then from there, the buy comes pretty easy. Now, the cool thing about this buy here, if we just zoom in, is that if you wanted to really maximize your RR, you could enter here, or from a seconds perspective, but you don't need seconds at all. You do not need seconds. Is that you could acknowledge how you could have some form of a breaker structure here. So some form of a breaker structure there. And the continuation off here, right? Nonetheless, that could be your breaker structure as a form of optimism, and then from there you could buy off here, right, to really maximize RR. But nonetheless, every one of these trades, there were four confirmations, at least four confirmations present. Right here, right, we got the sweep of a COT, inefficiency PA. We got the optimism, inefficiency PA. We got perfect market timing. We do got some divergence here, right? And price rolls over. Now we're approaching the 11th hour. So if I erase some of this, just to clear some of this up. So now, as done so, this 2-hour candle closed bullish as anticipated, right? Primarily because of what the algo delivered here. The algo must respect itself. So the next 2 hours fulfill that, right? We close bullish. Now, at the very last hour of this 2-hour segment here, price runs up very inefficiently here, as this box signifies here, and we sweep the current daily high into a point of interest. Now, at this time in the market, right, price has expanded drastically, right? So that's a key takeaway that you can take from this, but not alone, but if you were just acknowledging what the algo was delivering, right? So if we acknowledge, we're going into another 2-hour segment. So if we acknowledge liquidity targets, right? So the liquidity target would be the current daily high and the previous H2 low. So now as price opened the very first 30 minutes of this next H2, we open, price sweeps very inefficiently, goes up and sweeps the current daily high, right? So therefore we can see that now the algo is essentially delivering an overbought scenario, right? So therefore, in this case here, I would be anticipating this H2 candle to essentially close bearish, right? But now this is the last 2 hours of this 4-hour segment here, right? Therefore, if I'm anticipating this last 2 hours to close bearish, and now I'm essentially anticipating this entire H4 candle, to essentially close bearish, right? So in this case, this is just perfect timing to do 2 things, right? Or 3 things actually, to essentially create this H1 high. So from the 11th hour to 12. This is then perfect timing to then create this H1 high, right? Also perfect timing in this case to create the H2 high and H4 high. Why? Because as we open, we acknowledge how inefficiently price sweeps the current daily high, a constant liquidity target. So therefore, the algo must respect itself, and we are going to respect the algorithm, right? And this is all a part of trading exactly what you see. In this case here, right? Uh, don't trade from a perspective of, well, what if it goes higher? Because we don't know, and we will not ever know what will happen next. You do not know and will not ever know what will happen next. The only thing you know is the algo and the edge. And in this case, both of them are presenting themselves, and you have all factors and confluences aligning as far as their constant liquidity target sweeps, market timing, acknowledging what the forest algo is actually delivering, right? So therefore, in this case here, if I am going to sell here, well, I must have a constant liquidity target, a target which would be the previous, well, in this case, in this case, it was the previous H2 low. At this current moment, it was the previous H2 low, right? Being that this was the most recent constant liquidity target that actually went and ran the major buy side liquidity, right? And from there, price rose. Now, at this point here, you could go break even, right? If you wanted to, you go break even here, but nonetheless, that's the price, the point in the market, price runs. Previous H2 low, actually go break even at the previous H2 low, and the main target for the day you could close out at the previous H4 low, right? And primarily being that you could see at this point where the liquidity was building in the market was essentially here, because acknowledge how deep this is to correlation to here, but the respect, right? Very nice to see. The market continuously delivers. Great, phenomenal examples day in and day out, right? It's just a matter of trading what you see, right? Trading what you see as you flow from H4 interval to H4 interval and H2 intervals, and just from interval to interval, wherever a constant liquidity target is essentially established, always acknowledge what the algorithm is delivering when sweeping some form, when sweeping a COT. Always acknowledge what the algorithm is delivering, sweeping a constant liquidity target, right? And it can even be a thing to a point where, at say example, at the start of this ninth hour here, right? It could be a thing where you could set an alert here, right? Acknowledge these targets, because this is something. Well, nonetheless, right? You could set an alert here, and you could set an alert here, right? Because those are the constant liquidity targets that you need to acknowledge when price is actually running, right? And then therefore, in this case, you're watching the algorithm, right? Now, as soon as price sweeps this, in this case here, you could set an alert here at this current H2 low, and then acknowledge the algorithm, what the algorithm delivers post sweeping, right? React to price. Never predict, because you never know what's going to happen next. Just react, right? So what's next? Now you have an alert set here, and post after you take this buy here, there's an alert here. right? Alert goes off. What is the algorithm now delivering at this point in the market? An overbought scenario, right? Inefficiently sweep, a constant liquidity target, perfect timing to essentially create H1 high, H2 high, H4 high, and potential daily high at this point, right? And then price rolls over. Right, so this is just a very a really good video, right? Talking about the Forex algo market timing, and in this case here, just a really great example that for one demonstrates focus the level of focus required to understand and flow, right? Um, the level of focus required to relax, so you can execute accordingly. Um, Focus, just in a zone, in a flow state zone, right? Um, and just acknowledging, that algo bouncing from liquidity target to liquidity target. Um, acknowledging time and price, and acknowledging that we don't take buys for continuations off plays like these, considering that this was the most recent constant liquidity target that just ran major liquidity, bust out liquidity. You know, not executing things like these keeps you relaxed, right? Understanding this, right, and then executing things like this keeps you relaxed because you're flowing. You're in a flow state, which allows you to relax. You can execute and capitalize every opportunity the market presents that thoroughly aligns with the edge. Not just, well, I kind of think, well, I see this. I don't, no, 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 no. Thoroughly aligns with the edge. Then from there, you can breathe, right? Not executing trades and heart rate getting, heart rate starting to speed up, or, oh, shoot, I don't know. Um, I don't know, I see this nice leg up, but price is starting to, come back a little bit. Should I close? No, 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 we're flowing. We're flowing. We're flowing. Because at this point in time, we don't know. We don't know what's going to happen next. And never ever will. The only thing we know at this particular time is our edge is thoroughly presented at this particular time in the market. So we execute.